My name's Rick Bloodworth. This is the Common Sense Christian Financial Channel. Today is Monday, February the 9th. We're about 3 o'clock Central Standard Time as I record this, so about an hour from the closing of the markets on the commodity exchange. I thought I'd bring you an update on the prices as well as what some of the dealers are paying, not just in America, but also at the suggestion of some of the viewers from around the world. Just a couple of items on that, and then also some different things that are going on around the world that should be of interest to all of us. But I want to start with just a very brief price update. Today we have opened up at $77.89, which was about a 20-cent gap from where it closed on Friday. And we have traded in the smallest range that we have had, I believe, just about all year long. The high has been $84.13, which is about where it's at right now. So we're up, I guess, about $6 and some change for the day. And again, we've got about an hour left to go. I do want to mention something about today that is unusual, at least since Christmas of last year, and that's the fact that in the nearest contract on the COMEX, the March contract, which seems to be getting a lot of attention right now, there were only about 65,000 contracts traded today. Well, that's the lowest volume that we have had. I'm not sure how far back it goes. I just went back to the Christmas Eve, and it was higher on Christmas Eve than it has been today. So pretty low volume. Again, that's just for the March contract, but maybe for the entire day we're trading at about 80,000 contracts, maybe a little bit more than that for all of the contracts. And so keep an eye on this. Sometimes when we have a move, especially if it's not a very big move and we don't have an awful lot of volume, it's like the market's catching its breath for something big, kind of like a python that's restricting its prey that kind of takes a breath for a second before it continues to squeeze. So I'm not sure exactly what that means, if it's good or bad, but I do know that we have traded in a fairly narrow range for recent months, and we have traded on extremely low volume for recent months. If you can call 400 million ounces total being traded is a low volume. But again, this is where we are. You can see, of course, the big trading day we had a week ago from Friday, and it has settled down some since then. Certainly last Friday we came way down to nearly $64 an ounce. Matter of fact, I think it was $63.98, but it bounced back up as soon as China found out that they had about half a dozen accounts that appeared to be trading under the same person's control. And so they shut that down, and as soon as they did that, the market went up in Shanghai, and then when it came to the Western markets, it also continued to go up until we closed at about $78, a little bit less, $77.69 on the U.S. market on Friday. And then again, today we're, last I checked, at $84.13, which was the high for the day, and we've still got about an hour left of trading. So kind of an interesting price pattern right now. We do seem to be kind of catching our breath a little bit. And again, I don't know exactly what that means. You might have some opinions on that. Let me know if you'd like to do that in the comments. But I'll go ahead and take that down. I want to give a little bit of some price updates as far as what's going on with our dealers, especially around America. But here's what I found on our dealers. The 90% is still selling way below spot as far as what you can sell it to a dealer for right now. I suspect you'd probably actually do a little bit better selling it online on eBay, or even better, a peer-to-peer transaction where both of you could get a fair deal. But here's what the online dealers are advertising right now. On 90%, JM Bullion will buy your 90% silver, your pre-65 U.S. coinage, for $25 under spot. SD Bullion is advertising today of buying that 90% silver at $21 below spot. And then I added Scotsman Coins. They're out of St. Louis, Missouri, and they've got a good buy and sell sheet online. If you ever want to go there, I would encourage you to do that. Again, it's Scotsman's coins, and they seem to have probably about as good a prices as anybody on a national basis, but they're right now purchasing your 90% for $18 below spot, and then Vermilion Enterprises is purchasing your 90% for $10 under spot as of today. And then as far as what they're purchasing it back at, JM Bullion will, what they're selling it for. JM Bullion will sell it to you today for spot. SD Bullion for $1 under spot. Scotsman has $7 under spot, the best price I've seen anywhere. And then Vermilion, $5 under spot for 90%. And it didn't sound like he had a lot of that left this morning. And then I looked at APMEX's site. I've had several that ask if I would include APMEX. I cannot get their bids as far as what they would offer you on silver without going through a lot of time and effort. And then once I got that, it would be outdated. But I can tell you that right now they're selling their 90% at $9 over spot. And so quite a bit higher than the other ones. As far as generic silver, just 999 fine silver, whether we're talking about rounds or bars, 1 ounce or above. JM Bullion today will pay you $15 under spot. SD Bullion $14 under spot. Scotsman $5 under spot. And Vermilion will pay you $2 an ounce under spot for your good quality 999 generic silver. And then on the sell side, what they will sell it to you for, JM Bullion will sell you generic silver at $6.50 an ounce over spot for 1 ounce rounds. SD Bullion $6 over spot. Scotsman $3 over spot. And then Vermilion $2 over spot. And again, APMEX $9 over spot. And then for U.S. Eagles, something that seems to be in pretty heavy demand right now, JM Bullion will pay you $8 under spot for your Eagles. SD Bullion $7 under spot. Scotsman will pay you $1 over spot. And then Vermilion will pay you $4 over spot for your Eagles. And then JM Bullion will sell you U.S. Eagles for $17 over spot. That was JM Bullion. SD Bullion, $13 over spot for U.S. Eagles. Scotsman will sell you those Eagles for $10 over spot. Vermilion for $8 over spot. And then APMEX for $14 over spot. I don't know if I'll continue to include APMEX, but I did want to throw them in and just show you where they were at compared to everybody else. And so we're seeing still some pretty huge ranges for our online dealers, particularly ones like JM Bullion, SD Bullion, and I suspect APMEX, if we could actually get the price they're willing to pay for. But we're looking anywhere from 20 to 30% on their spread between what they'll purchase silver for and what they'll sell you silver for. So the online dealers still are not convinced, even though they're starting to run a shortage, but they're not convinced that the silver prices are going to settle down anytime soon, and so they're not taking any chances. Some of the smaller shops, Scotsman, although they sell quite a bit, and Vermilion, who also sells quite a bit, have much tighter spreads, and they'll give you an idea as far as if you're planning on buying or selling, maybe some options that you might have. Again, one gentleman in particular suggested that I start giving some world prices, which I really appreciated that suggestion. I went to London and I found one called Bullion by Post. And this is advertised as the UK's #1 online dealer. And this will give you an idea of what their prices are compared to U.S. prices right now. If you're a little bit aggravated at U.S. prices, this Bullion by Post will sell an ounce of generic 999 silver for $44 over spot. Of course, they sell theirs in pounds. You have to convert that, but $44 US dollars over spot for 999. And then their Britannias, which are their equivalent, obviously, of our U.S. Eagle, they'll sell for $36 over spot. And so that gives you an idea of where they are on the sell side considerably higher than the U.S., not to mention the fact that they have a tighter supply, it appears, than we do. And then there's all sorts of anecdotal stories around the world, from India and Australia and Switzerland, who is said to be out of any kind of silver in any quantity right now. It does appear that there are physical shortages in the retail market, on the retail side, developing right now. They've been developing for the past week, and they're starting to get a little bit more and more pronounced. As things tighten up on the retail side, I believe you can expect to see some of these tremendous premium margins or spreads starting to tighten up a little bit. Until that point, I would definitely shop around, and I would get what I could, what I was wanting to buy as reasonably priced as possible by doing so. And then one last quote that I wanted to pass on to you. This is from the Shanghai Exchange. They are right now at a $5 premium to the U.S. Spot market. So if you were to buy on the Shanghai Exchange right now, they'd be charging you the equivalent of $5 more for the same ounce of silver, or about 6% higher. And so again, hopefully that will give you an idea of what's going on. We're starting to see quite a tightening in supply on the retail side. You can draw your own conclusions on that. Remember, it was just about a week and a half, 2 weeks ago, that we had such a glut of a physical supply in our coin stores in America and in our online dealers in America, where they really didn't even want to purchase your silver until things settled down. Well, when the prices shot down, people came out in droves and started buying. There's been a number of stories from some of the coin shows around America where there's been heavy buying at those, just of regular silver bullion and 90% silver bullion. And so, again, there does seem to be a swinging of the pendulum on that side. Now, I wanted to also bring up something that I think is very important. There's some important dates that are coming up right now that I think everybody who's interested in buying and selling silver will be vitally concerned about or interested in. Friday the 13th at noon, the Shanghai Exchange, as well as the Shenzhen Exchange in China, they're going to be closing down at noon, and they're not going to be opening up until a week from the next Monday. And so Shanghai, the main physical bullion exchange in the world, is going to be shut down from noon this coming Friday the 13th until the opening on Monday, the 20th of February. So keep that in mind. That's going to really take out one of the primary price setters, if not the primary price setter in the world, and that can give some people an opportunity to maybe fiddle with prices a little bit, who like to get involved with some selling on certain markets, especially if there's any kind of slower volume than usual. And I believe this will slow the volume down worldwide. It probably will increase the volume on the LBMA and the COMEX, just because that's where people will be going. But again, that'll be closed starting Friday the 13th in Shanghai for the Chinese New Year. Also, Hong Kong is going to be shutting down the next week at noon on Monday until, I think, opening on Friday. The Hong Kong Stock Exchange will be closed. That's not as big of a deal to us as the Shanghai Exchange will be as far as the silver prices. And I'm not sure what the LME, the London Metal Exchange, is going to be doing, who operates out of Hong Kong. You may know about that. If you do, share that in the comments if you wouldn't mind. But again, Hong Kong's stock market's going to be closed down for the Lunar New Year starting next Monday at noon, and it'll be closed until the opening on that Friday. So keep that in mind as well. And then also I wanted to just point out what the volume has been in the last couple of days. On Friday of this last week, we had in the futures market on the COMEX about 150,000 contracts traded on that day, which is about 750 million ounces of silver, just a little less than the annual world mining production. And so Friday was a fairly typical day, but today we've only traded 65,000 on the front contract, on the March contract, and so that would suggest maybe 80 to 85,000 contracts total. That was with an hour left, and a lot can change in an hour, but if this remains anywhere close to this, this will be the lowest volume day going all the way back to Christmas Eve of last year. And they only operated for part of that day. So you might want to just kind of file that away for future consideration. But again, we've had a very small range by comparison recently and a very small volume. So things have slowed down on that. And just one last observation or comment that maybe will be of interest to you, or maybe not. But if I were not planning on selling or buying right now, I'd probably just kind of remain on the sidelines. I'd be more inclined to buy right now if I had that as part of my plan than I would be inclined to sell right now, because the sell-buy spread is so vast right now that you're probably not going to get a very good price if you want to sell silver. But if you don't have to and you weren't planning on it, I just sit on the sidelines for right now. I think this next few weeks is going to be extremely interesting. We've pointed out that on February the 27th, this will be the first day of intent to take delivery on the COMEX exchange. The open interest on the March contract has dropped again. Last Friday, it dropped to about 385,000 contracts, which was about, let me check on that, pardon me for losing that. The open interest, last Friday on the March contract was 77,000 contracts, or about 385 million ounces. And to my understanding, the COMEX has about 100 million ounces that are already registered and delivery ready. So there's quite a gap in that still. And so February the 27th could be a fairly significant day as far as people announcing their intent to take delivery. It will show you, for one thing, about those who have had a pretty good demand of late, if that demand is continuing, and if they are concerned at all about that silver being available to them the next month. And so if there's a heavy intent to take delivery on the 27th of February for the March contract, I think that's going to tell you something about where our demand picture is right now. But if there's not a great demand signaled by that intent to take delivery, then maybe we're about to slow down on prices and activity as well. So just keep that in mind. A lot of big dates coming up. There's a lot of room for the banks and our Federal Reserve, which does have a trading desk on the commodities exchange, or at least on the stock exchange. And so I would keep my eye open for some of the things that are coming up, and be aware that the big players in the market, very often take advantage of any type of weakness in the market, or any type of opportunity that may present to themselves. And these dates coming up, Shanghai being closed, may be viewed as an opportunity by them to try and manipulate the market. And then the February 27th, first day of intent to take delivery, could be another one. So if you don't have to do anything and you weren't planning on doing anything, I think I'd just sit on the sidelines. If you dollar cost average in and you're planning on making a purchase, well, that may be something, the sooner the better, if that's something you are planning on doing anyway. I don't know that I'd get too carried away, though, myself on either side of that. But that's the video for today. I hope it gives you something to think about. Let me know what you think about this in the comments. Again, we've had such excellent comments and a lot of really good, solid, actionable information that's been contained within some of those comments. So I really appreciate your adding those to the conversation. I appreciate also all of you who have been watching to this point, and everybody who's subscribed and have supported the channel. I'm in your debt for that. But again, thanks for watching today. I hope we'll see you again next time. God bless.